Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index climbed above 100.2, its highest level in nearly 2 weeks. Markets now price only about a 34% chance of a 25 basis point move. The dollar briefly touched 100.25 as investors await key US data that could clarify the Fed's policy path. Strength in the dollar is being driven by two fronts: political tension in Japan over monetary policy and fading US rate cut expectations despite signs of slowing economic activity. WTI crude traded near $58.8 on Thursday, pressured by reports that Washington has signaled to President Zelensky it wants Kyiv to accept a US drafted ceasefire plan involving territorial and military concessions. If the war winds down, Russian oil exports could increase, raising concerns about oversupply. Although US sanctions continue to squeeze Russian revenues and the November 21 deadline for certain operations is approaching, geopolitics are no longer driving a risk premium. Spot gold hovered around $4,075 on Thursday. Gold spiked 1.6% earlier in the session, touching $4,132, but quickly reversed as the dollar extended its rally. The Fed's latest minutes leaned hawkish, pushing the dollar to a 2-week high and dampening bullish sentiment. Rising real yields are the key pressure point. Gold, a zero-yield asset, struggles whenever real rates climb. The Fed signaled it would rather risk softer employment than let inflation flare up again, reminding markets that rate cuts are far from guaranteed. The yen weakened to around 157.5, a 10-month low, as markets brace for Prime Minister Sane Takai's upcoming stimulus package, expected to exceed 20 trillion yen. This massive spending plan has revived concerns over Japan's fiscal health, triggering renewed sell Japan flows that pressured both the yen and local bond markets. The currency also slid sharply after Finance Minister Katayama noted that FX issues were not discussed during her meeting with the Bank of Japan governor. The euro slipped just above 1.15, its weakest level in about 2 weeks, as the stronger US dollar continued to dominate. The ECB is widely expected to keep rates unchanged through the end of 2026, with inflation nearing its 2% target and unemployment at record lows. The European Commission also upgraded its 2025 growth outlook for the Eurozone to 1.3%, driven by stronger exports to the US ahead of potential tariff changes.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.